It is 8:05 a.m. Pacific Daylight Time. It is the 14th day of August, 2026. This is episode 1373 of Bitcoin, and Tether finally gets an audit from one of the big four auditing firms, KPMG. We've known that this was going to happen for a while. I told you about it weeks ago here on the Bitcoin and podcast. But it's finally come through, and KPMG has generated a report. And that's going to be our first story today here on the Bitcoin and podcast with me, your host, David Bennett, bringing you all the news that you can use about Bitcoin and macro from around the world. And boy, howdy, do we have some stuff from around the world. JPMorgan cutting ties with Polymarket, told him to go get a new bank. Kind of reminds me of 2020, 2021, that kind of time frame. Then we're going to drift over the pond to Ireland. They got a new AML strategy that I'll tell you about. The White House. Ooh, I kind of like this one. The White House is telling private companies to go hack. I know it's bizarre, but there's probably a catch in there somewhere. UBS ups their Bitcoin position. Norway Sovereign Wealth Fund has found themselves in a position where they have upped their Bitcoin exposure. And Strategy and Metaplanet facing some headwinds with possible exclusion under MSCI's new proposal. We've talked about this. It's been a while. It's actually been quite a while since we talked about MSCI's new proposal, but it is back on deck and is probably not helping the Bitcoin price today. Just saying. City of Baltimore themselves, not the state of Maryland, not the federal government, the city of Baltimore is going after prediction markets. A little turn there. All right, let's get to the lead story for today. Matthew DeSalvo's writing this one for Bitcoin Magazine. Tether finally completes independent audit of reserves with KPMG. Stablecoin giant Tether has announced that KPMG United States completed the first independent audit of its reserves after years of struggling to get a Big Four accounting firm to do it. The San Salvador-based company, which issues the largest stablecoin in existence, said the audit was, quote, the largest inaugural financial audit in history, end quote. For years, Tether was criticized for being coy about its reserves and not having an independent audit for what it holds behind its flagship token. Tether said over the years that it was eager to work with the Big Four firm for an audit. Well, quote, for years, some detractors said an audit of Tether could not be completed, Tether CEO Paolo Ardoino said in a statement, quote, they said the company refused to subject itself to the most rigorous of scrutiny. We have once again proven them wrong. Completing our financial statement audit sets a new standard for the industry and reflects the leadership that we've brought to this market from the start. Put a tie on that suit speak. Tether did not mention its Bitcoin holdings in its statement, nor did it immediately respond to questions from Bitcoin Magazine. But it did say that KPMG physically counted and inspected every individual gold bar held by Tether, verifying the existence and identifying information for each bar rather than relying solely on reports from custodians and counterparties. End quote. Tether added that all assets and statements were subject to independent substantive testing and verification, and the company has in recent years upped its gold buys, holds more U.S. Treasuries than some countries, and has nearly $60 billion in Bitcoin in its reserves, according to data from Arkham Intelligence. Quote, Tether has evolved from a disruptive stablecoin issuer into one of the most financially significant and operational sophisticated private companies in the world, continued Ardoino. quote, this audit demonstrates that our financial infrastructure and governance have evolved alongside that responsibility, end quote. Tether's USDT product has the market cap of $183 billion, making it the third biggest cryptocurrency in existence. Okay, there's one thing that's really, there's two things that are rankling me in this report. The first one is the fact that they're saying that Bitcoin was not part of this audit. I need to find that. Hold on for a second. Because I want to get that sentence perfectly. Because it's important. Flagship token, blah, blah, blah. Hold on for a sec. Yeah, here it is. Tether did not mention its Bitcoin holdings in its statement, nor did it immediately respond to questions from Bitcoin Magazine. So what exactly does that mean? Tether did not mention its Bitcoin holdings in its, statement to the public about the KPMG audit? Or didn't mention its Bitcoin holdings in the audit itself? I'm going with the former because I just can't imagine that a big four accounting firm would say, yeah, we're not going to count the Bitcoin. It's just $60 billion sitting over there. But no, we're more interested in the gold. The other thing that I'm concerned about here in this particular rendering of what's going on with Tether is that they seemed very concerned about the gold holdings. I'm concerned about all the corporate paper and government bonds that Tether is using to back their stablecoin. I'm not detracting. I'm just saying, look, man, there's some serious holes as to what this audit entailed. Now, this is probably the fault of Bitcoin Magazine and the author of the story not going deep enough into it. But, this is where we're at. I'm going to make some presumptions here that yes, KPMG crawled all over everything and seems to have given a green light to the fact that their reserves really do match how much Tether is actually out there in the world. Doesn't really matter because KPMG has basically audited the company. Now we have Tether as being fully audited by not just an auditing company, but by one of the big four, and KPMG is probably the largest one of them. And their corporations around the globe use KPMG to come and do their audits and a whole bunch of other services too, but full-blown audits isn't something to sneeze at. I mean, you've got accountants and bookkeepers and all kinds of quants just crawling over everything, looking into every file that you got, physically inspecting shit. I mean, it just goes on and on and on. It takes a long time to complete that, and these audits are really expensive because you got to foot the bill for all those people, right? So anyway, we now have Tether being fully audited by KPMG. Let's move on to JPMorgan, cutting ties with Polymarket over regulatory concerns. Zoltan Varday, Cointelegraph. JPMorgan Chase ended a banking relationship with Polymarket over regulatory concerns, according to Financial Times. JPMorgan notified the prediction market platform in October of 2025. That way back in October of 2025. We're just finding out now that it needed to find a new bank? Good God Almighty. Polymarket now works with an unidentified lender. Still, JPMorgan has maintained other ties with Polymarket. The bank is allegedly keen on a potential underwriting role should Polymarket attempt to go public. We won't offer you banking services, but we will underwrite your IPO. Fucking suits. Polymarket reportedly said that it continues to have a close, active relationship with JPMorgan. Prediction markets have been facing increasing regulatory scrutiny in the U.S. as well as abroad. More than a dozen U.S. states have taken legal action against Polymarket, Kalshi, or both over sports event contracts, while authorities in several countries have also blocked or restricted access to Polymarket. No shit. You think? you know what? I'm going to do the city of Baltimore right now because it's basically going after prediction markets, and let's stay on theme here. This is written by Turner Wright, also of Cointelegraph. The city of Baltimore goes after prediction markets for sports betting. This is not the US federal government, and it's not the state of Maryland. This is now a city going after this stuff. So I think that warrants a little bit of, oh, I didn't realize the city could do that. I would think that this would be only done at a state level, but no. Because the city of Baltimore and its mayor, Brendan Scott, both filed lawsuits against Kalshi and Polymarket over allegations the companies violated local gambling laws. In a Thursday notice, the Baltimore mayor's office said that the two prediction market companies operated illegal, unlicensed sports betting platforms and misled users about the legality and regulatory status of their products. The lawsuits are centered on claims disputing Kalshi's and Polymarket's characterization of event contracts, arguing that the trades amount to unlawful wagers under state laws. Quote, these companies are running sportsbook without licenses and betting that a new label will put them above the law, said Scott. Quote, it won't. Baltimore will not let multi-billion-dollar companies put profits over people and harm our communities through illegal gambling, end quote. As if legal gambling is going to help them. Dude, get your shit straight. Notably, the city's complaint against Kalshi included Robinhood, Webull, and Coinbase as partners with the prediction market platform. All companies were accused of deceptive practices by marketing sports contracts as something that can, quote, lawfully be purchased and traded in Maryland, end quote. The legal action against prediction market companies was just the latest conflict between U.S. state and federal authorities, and many experts expect it to end with an appeal to the Supreme Court. Yeah, most definitely. The U.S. Commodity Futures Trading Commission under Chair Michael Selig and companies have argued that event contracts on prediction markets amount to swaps within its purview, while both Baltimore lawsuits and other state-level authorities dispute that claim. Quote, city-specific action runs counter to the CFTC's established framework for regulating prediction markets, a Polymarket spokesperson told Cointelegraph. Quote, as courts have recognized, prediction markets on CFTC-registered exchanges are governed by federal law, not a patchwork of state and local rules. And that's the end of the article. I just find it fascinating that here we are now at the city level. You know, I'm actually kind of surprised that it wasn't, the county that Baltimore is in, and I don't know what the county name for Baltimore is, but that's one level up, because that not only includes all of Baltimore, but any other cities in the county. I would kind of think that the county commissioners would somehow or another instill these lawsuits against Polymarket at that level before we saw a full-blown city do it. Because if it sets precedent, then you'll see Chicago, New York City, Albany, White Plains, Buffalo, all, I don't know, Miami. Well, Miami wouldn't do it, but because it's in Florida, and I think Florida's pretty much gung-ho about this stuff, but you get my drift. Having this come through at the city level is now kind of raising the bar on this. There is nobody who wants this shit going on. And no, it has nothing to do with protecting their citizenry because illegal gambling. That's bullshit. And I'm not sure, but I'm not sure if there's betting in Maryland as a state or not. Let me find out. Betting in Maryland. Let's see what that comes up with. Can you bet Maryland? Sports betting is fully legal and regulated in Maryland for anyone 21 or older, with both mobile and online betting and in-person retail sports books being active. So, yes, there's active legal sports bet in Maryland. So, what this really boils down to is that they want their cut. It is as simple as that. It's mafia gang level bullshit. And speaking of gangs, let's talk about Ireland. lots of gangs, organized crime have come out of Ireland. But this time, the organized crime is at their federal level because Ireland's new AML strategy brings enhanced checks on private crypto wallets. Does that mean self-custody? Let's find out. Stephen Graves, Decrypt. Ireland published its first national anti-money laundering strategy yesterday, which was Thursday, including crypto measures targeting wallets held outside of regulated firms. Most of the EU transfer of funds regulation has already been implemented in Ireland, with the Department of Finance saying that the remaining elements introduce new obligations for crypto asset service providers, requiring enhanced checks on transfers involving private crypto wallets and stricter due diligence when dealing with overseas crypto firms. The mechanism is the FATF travel rule, under which information on the originator and the beneficiary must accompany each transaction. The strategy document records that it arrived along MiCA, which created crypto asset service providers as a category of regulated entities across the bloc. Ireland gave crypto firms less room to adjust than most member states, allowing a 12-month grandfathering window against the 18 months the regulation actually permits, according to ESMA's list. That closed at the end of December 2025. So the new obligations land on firms already holding full authorization. MiCA came fully into force across the bloc on July the 1st, and Brussels is preparing to reopen the rulebook in 2027 to cover non-EU stablecoin issuers. Translate and minister for, I missed that. Taniasti, I think is how you pronounce it. Taniast and Minister for Finance Simon Harris said criminal organizations are exploiting new technologies, crypto assets, and complex international financial networks to conceal profits. Oh my God. And that the launch sends the message that, quote, Ireland will not be a safe place to launder criminal proceeds. The strategy runs to 2030. Thursday's document builds on a 30-point action plan that the government established in June alongside its national risk assessment, which named crypto asset misuse among Ireland's evolving financial crime threats and promised enhanced safeguards around crypto assets and digital finance. The most concrete domestic crypto measures was set out in that June plan, which tasked the Gambling Regulatory Authority of Ireland with establishing an industry standard for accepting crypto-related activities as a source of funds with due diligence to verify the money was legitimate. It is slated for the second quarter of 2027. Ireland's measures arrive inside a wider EU timetable that tightens further. The bloc's anti-money laundering regulation bars crypto asset service providers from providing or holding anonymous crypto asset accounts or accounts allowing transactions to be anonymized or further obscured, including through anonymity-enhancing coins. That prohibition stops short of self-hosted wallets, exempting providers of hardware, software, and self-hosted wallets that hold no access to or control over them. The rules apply from July 2027, policed by the Anti-Money Laundering Authority in Frankfurt. Outside of the EU bloc, the UK has been reworking its own regime, with Her Majesty's Treasury, or His Majesty's Treasury, publishing draft reforms in September 2025 that would lower the change in control notification threshold. for crypto firms from 25% to 10%. The travel rule Ireland is finishing transposing comes from the Paris-based body whose recommendations grade national frameworks and which has been pressing members harder on crypto. In a July report, the FATF, the FATF, said that DeFi platforms with identifiable controllers already fall within its rules and should be supervised like other financial firms. It also found nearly 93% of surveyed jurisdictions had yet to apply the standards to any qualifying arrangements. Looks like they're not getting much on the uptake. They will, but it's just not happening clearly not happening all at once. Now, I'm going to go back up here because I highlighted something in this story. Let's see. What did I highlight here? Ireland will not be a safe place to launder criminal proceeds. I just want to say something about this. It's not like I haven't said anything about it before, but why are we assuming that every single citizen of the world is a criminal? I mean, do all of us have some kind of criminal dealings that we need to launder money? Is money laundering so profoundly everywhere that we just need to treat everybody like they're a potential money launderer? Because I honestly don't think this has anything to do with money laundering. The whole AML KYC is just control. I don't think they care. Just like Baltimore doesn't really give a shit whether the gambling is illegal or not. The only thing that they really do care about is that they can't get their cut. And this is sort of the same way, although it's not as much as the AML KYC guys in Frankfurt and EU and the UK actually give a shit about getting their cut as much as they want full control. They want full control. That's the United States, Australia, New Zealand, everywhere in the West, China, Russia. We've just allowed the world to be run by the very worst miscreants that we could find. It's sad, but it's true. Let's run the numbers. CNBC futures and commodities. Brent North Sea is up 3/4 of a point to 87.68 a barrel. West Texas Intermediate up a third to 81.49. Natural gas, not a hedge, 1.6 in the green, $2.77 per thousand cubic feet. Gasoline is up 2/3 of a point to $3.14 a gallon, and Murban crude is down 2 1/3 to 88.02. Metals are mixed, with palladium down 1/3, gold up 1/2 to 44.45 and 6 dimes. Platinum is up just over a point. Silver is up 1/2 point to 65.34 an ounce, and copper is down 0.2%. Ag is mostly in the green today. Biggest winner is wheat, 3.33. Ooh, the magic threes to the upside. And let's see, who's the biggest loser? Ooh, sugar, 1.5% to the downside. And then livestock, live cattle down 1 1/3. Lean hogs down 1/2. Feeder cattle down 1 3/4 of a point. The S&P is down 0.19%. NASDAQ is down 1/4 of a point. The Dow is down 1/4 of a point, and the S&P Mini is the only thing in the green. It is up 0.14%. And then there's Bitcoin chilling out at, good Lord, $62,800 a coin. It's a $1.26 trillion market cap, and we're only going to be getting 14.3 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,069,923.01 of. Average fees per block are normal. You got about 45 blocks carrying 88,000 unconfirmed transactions waiting to clear at high priority rates of 2 sats per VByte. Low priorities will get you in at 0.8. Hey, look at that. Hash rate is up actually above 900 exahashes per second. 902 exahashes per second. And that's all the security for the Bitcoin network that I need to see. From Borked World Order, yesterday's episode of Bitcoin and, I've got INPC with a fat row of sticks, 1,111 sats. Thank you so much, but he didn't say anything. Jason High with, 1,111 sats says, have some sats. INPC says, with 500 sats, comes back and he actually says something. He says 1111. I guess he was foreshadowing his big boost there. Nick Dose with 257 says cheers. And Noster Gang with 111 sats says thank you. No, thank you. That's the weather report. Welcome to part 2, the news that you can use. White House lets private firms hack cybercriminals, but at their own legal risk. Oh, okay. How the hell this runs out, I don't know. Jose Antonio Lons, writing for Decrypt.co. President Donald Trump signed a memorandum on Tuesday directing the federal government to enlist vetted U.S. companies in offensive cyber operations against foreign criminal networks. The National Security Presidential Memorandum, dated August the 12th, stands up a program inside the National Coordination Center of the Homeland Security Task Force. Quote, this memorandum expands the fight against TCO perpetrated cybercrime by incorporating the ingenuity of the private sector, the White House wrote in the order's purpose section. Quote, by partnering with vetted United States companies subject to the direction and oversight of the federal government, wow, read that as fascism, we will enhance our ability to counter TCO threats and combat transnational cybercrime, fraud, and other predatory schemes against American citizens, end quote. Let me pause. I don't use the word fascism lightly. You know, I don't go to like every protest under the sun, from everything from like LGBTQ to I hate Trump to I have blue hair. No, that's not me, man. But I can't, when government partners with the private sector to do anything, by definition, that's fascism. It's not, I'm not making a moral judgment. I'm not making an ethical call. I'm just saying that by definition, when government and private industry team up, it is technically and by definition fascism. And it, generally speaking, doesn't end very well. I mean, not that I'm like all like wanting to protect, the cyber criminals out there. Fuck them, whatever. But dude, it just makes it, the hackles on the back of my neck just stand up every time I see stuff like this. Continuing, 2 executive directors, one each from the Department of Justice and the Department of Homeland Security, would run the program. Private firms that contract with either agency could propose and carry out operations to access, surveil, disrupt, or destroy systems tied to those networking operations abroad. Here's how it actually works. A company applies, clears a vetting process, and posts a bond or escrow of at least $1 million, which it will forfeit if it breaks any of the rules. That's what a bond is. It gathers threat information from other businesses or from state and local agencies, then proposes operations to the NCC at Homeland Security. Nothing moves until the program's executive directors review the package and give written approval and direction. The government keeps operational control. The company pulls the trigger only on the government's say-so. The memo authorizes, quote, cyber surveillance operations, end quote, accessing systems without the owner's permission or by exceeding authorized access, and broader offensive action against the networks behind ransomware, phishing, financial fraud, and sextortion schemes. Operations that would cause, quote, critical outcomes are barred, and any hit on a U.S. person or a U.S.-based system must stop immediately with minimization procedures. Per the memorandum, quote, it is the policy of the United States to use all instruments of national power, including the innovative capabilities of the private sector, to combat cybercrime. The scale is the stated justification. Sure. Crypto scams alone cost Americans an estimated $80.7 billion just last year. North Korean hackers now have more sophisticated and complex ways to launder stolen crypto. And the government has already seized more than $25 million in crypto tied to investment and romance scams. This program would scale that model with private hands. The program's targeting rules sit in a classified annex, so the public guardrails are pretty thin on details. The memo gives companies 60 days before implementation guidance is due. So, wow. Here's what I'm thinking. This is my gut feeling. It's a front. I don't trust these people. I'm sorry. I don't trust the federal government of any country. You know, whether it's the United States or freaking Ireland, I don't care. They're all miscreants. That said, I think this is a front. Because I think what's really going on is that this is a central intelligence agency operation that's actually operating in the back. And the reason I say that is because, dude, giving power of this entire quote unquote new system that we're going to implement, being governed by some dude out of the Department of Justice and another person out of Department of Homeland Security, just seems a little, there's something about that doesn't make sense. Department of Justice, I can see, I can see both of them, but if you're just targeting foreign nationals or foreign, groups of people or even foreign companies, that has nothing to do with the Department of Homeland Security. Department of Homeland Security would be a defensive position on cybercrime, most definitely, but it is not offensive. According to its mandate, the Department of Homeland Security is for protection of the domestic soil. It has nothing to do with projecting power outside of the boundaries of the United States. The Department of Justice is not an outbound agency. I mean, it kind of has, because it can go grab some, either current or ex-U.S. citizen for shit like tax evasion, or they got a murder charge against them or whatever. They will definitely project U.S. power outside of the United States to go get that, but it's centered on American citizenry and American interest. It's not supposed to be a power projection for destroying somebody's organization because of cybercrime. This is definitely in the wheelhouse of the Central Intelligence Agency, not the FBI, because if the FBI were involved, I would still say the same shit. Federal Bureau of Investigation in the United States is for domestic issues. It's for domestic crimes. And I'm not talking about wife beating or husband beating. I'm talking about like fraud and shit like that occurs within the United States. Missing persons, shit like that. Alien abduction, that happened on U.S. soil. The CIA, that's why I'm looking at the CIA on all this. That's why my gut feeling is going this way. They're the ones whose mandate is the only one that I can think of, other than the U.S. military, that does power projection like this outside of the boundaries of the United States. The Department of Justice teaming up with Department of Homeland Security to commit cyber attacks on foreign nationals and foreign groups makes absolutely no sense, because both of them have a mandate that suggests domesticity and not foreign relations. Hell, I'd even accept the State Department of the United States before I'd accept Homeland Security being involved in this. I call bullshit, but I can't call bullshit any more than I already have. So let's move on to UBS ups Bitcoin position and buys more shares in BlackRock's ETF. Matthew DeSalvo Bitcoin Magazine, Switzerland's largest bank, UBS, has upped its exposure to Bitcoin. UBS bought even more shares in BlackRock's iShares Bitcoin Trust, bringing its total position to over $83 million across 2.5 million shares, according to a filing with the U.S. SEC. The bank has slowly upped its exposure to the biggest cryptocurrency by market cap since BlackRock's fund got approved back in 2024. The filings are the latest examples of traditional institutions seeking exposure to Bitcoin. ETFs like BlackRock's Bitcoin Trust, which trades as IBIT, allow investors to buy exposure to the leading cryptocurrency without having to store the digital coin directly. Since the SEC approved a slew of Bitcoin funds in January 2024, major firms have been able to buy exposure. BlackRock's IBIT is the most successful crypto ETF. Pension funds and U.S. states have all bought exposure to Bitcoin via the ETFs, along with more traditional investments like tech stocks and other U.S. equities. The shares in IBIT aren't the only Bitcoin investment UB has either. The filing shows that the bank also has exposure to other premium income and other Bitcoin-related ETFs, bringing its ETF holdings in the cryptocurrency to around $90 million total. The bank also has invested in American Bitcoin Corporation, the Bitcoin mining company backed by U.S. President Donald Trump's sons, Eric and Donald Jr., with a position worth a little under $1.5 million. News dropped earlier this year that the Swiss bank was planning to offer Bitcoin trading to a select group of private clients in the country. And that's the end of the article. And I haven't heard any more about that as to whether or not UBS is actually actively trading. Since I haven't heard it, I'm going to presume that they haven't, but they were planning on it. So the question becomes this. If people like UBS keep buying more of BlackRock's Bitcoin Trust, why are we seeing prices drop? It's an unsophisticated question, right? But there's no reason not to be unsophisticated. Fuck, man. I'm left side of the bell curve, so why not ask the question? If people keep buying this ETF and the ETF has to buy physical Bitcoin to actually back those shares, then why are we seeing price drops? Why is news like UBS continuously buying Bitcoin not stabilizing the price or sending it slightly upwards? And my answer is that I don't know. Again, this is an unsophisticated position because there's a lot of macro going on around the world. The Japanese, government bonds are at closing in on all-time highs on their yield, and that's not good for the yen carry trade. People can't really get cheap yen to go out and buy stuff that appreciate faster than the interest rate that they owe on the yen that they borrowed in the first place to buy the thing. So that's not working out all that well. We got persistent inflation across the board in the world. It's not just the United States. So that's not helping. We got the whole Strait of Hormuz and the mess in the Middle East and Israel and all that shit. And clearly that's not helping anything. So I understand that my position here or my questioning here is rather unsophisticated. I get it. But still, I think it's okay to ask those kinds of questions. We don't always have to be all that sophisticated. Moving on to Norway, whose sovereign wealth fund sees indirect Bitcoin exposure hit an all-time high. Let's remain unsophisticated here. With Strategy accounting for 86%. James Hunt, theblock.co. Following its latest biannual disclosures, the Norway Sovereign Wealth Fund's indirect Bitcoin exposure actually grew by 21.2% in the first half of the year and 60.5% over the past year to 11,549 Bitcoin. It's about 725 million, according to K33, with significant investments in companies holding Bitcoin such as Strategy, Metaplanet, Mara, Coinbase, Block, and Tesla. Quote, NBIM's indirect BTC exposure has reached a new all-time high, entering five-digit territory with 11,549 Bitcoin held as of the end of H1 2026. K33 head of research Vettel Lund said on X, quote, "This marks the sixth consecutive period in which the world's largest sovereign wealth fund has seen its indirect BTC exposure grow," end quote. Norway's central bank, Norges Bank, is responsible for managing the government pension fund. Managing the government pension fund global through its investment management division, Norges Bank Investment Management, under a mandate from the Ministry of Finance. It's one of the world's largest sovereign wealth funds, with around $2.4 trillion in assets. Why can't we have that? Anyway, that's according to the latest disclosures this week anyway. Primarily invested in global equities, bonds, and real estate. The country's Bitcoin exposure is equivalent to around $125 or 205,000 sats per capita, according to Lund. It reflects 0.03% of NBIM's total AUM, assets under management, down from 0.04% end of year 2025. Quote, "It's important to note that this exposure in all likelihood is not a deliberate measure from the fund, but rather a consequence of its broadly diversified portfolio. Still, it represents one of the clearest examples of Bitcoin's advance into mainstream finance," K33 said. NBIM's indirect Bitcoin exposure has steadily increased since 2022, driven largely by companies rapidly adding BTC to their balance sheets as established players like Strategy continued aggressive accumulation. I guess they haven't read the news over the past couple of weeks. Indeed, the indirect exposure is heavily concentrated in Strategy's stock, which represents nearly 86%, or 9,914 Bitcoin of the total. NBIM holds 1.17% of the business intelligence and corporate Bitcoin treasury firm shares, valued at $357.3 million as of the end of June. Metaplanet accounts for another 671 Bitcoin, Mara 421, Coinbase 183, Block 120, and Tesla 97 Bitcoin per K33. The sovereign wealth fund's largest percentage ownership of any individual company holding Bitcoin is Metaplanet, owning 1.56% of its shares. NBIM's indirect exposure to cryptocurrencies has mostly been confined to Bitcoin. However, the sovereign wealth fund's latest disclosures also outlined a new position in the Tom Lee-chaired Ethereum treasury company Bitmine, adding indirect exposure to Ether alongside its Bitcoin-linked holdings. The fund held 6.15 million Bitmine shares as of June the 30th, representing a 1.1% stake in the company, with Bitmine currently holding 5,805,000 ETH. That's equivalent to around 67,340 ETH itself. What's $126.3 million worth of indirect exposure. And then they talk about Bitcoin currently trading down. Let's see, is there anything else? Nope. That's the end of that particular article. So again, we get into our unsophisticated question. If they keep buying all these companies that have Bitcoin on their balance sheet, shouldn't the news kind of filter through Joe Blow on the street and have them say, "Oh my God, maybe we should get some direct Bitcoin exposure"? This one, not so much as the last story. Still, it's nothing to sneeze at. Let's move on to the last story of the day. Bitcoin holders Strategy and Metaplanet face stock index exclusion under MSCI's new proposal. Omkar Godbol writing for CoinDesk. Top publicly listed Bitcoin holding firms, Strategy and Metaplanet, are back in MSCI's crosshairs months after dodging the index provider's crypto-specific exclusion rule. We're back again. This is like this shit happens all the time. They just continuously try and try. Can't get the law through. Can't get this bill through in the United States government. We'll just reword some shit, give it another title, and push it back through, and so it looks like something else. And we'll continuously do that until it finally gets passed, or we run out of steam, whichever comes first. Dude, if you don't get it through the first time, there should be it should be a double jeopardy thing on things like this. Like if you try me for murder and I get found innocent, no matter what you find in the future that might change the way that trial would have gone, you can't retry me. You just can't. And conversely, if I get found guilty for that murder and I'm cooling my heels in a federal penitentiary because of it, and somebody like the prosecutorial, I don't know, gopher finds yet more evidence that not only did I kill the dude that I was already found guilty of killing, but I did it in such a way that I should probably be tried again. Can't do it. Even if you want to add to my sentence by retrying me, you can't do it. It's double jeopardy. You cannot retry the same person for the same crime twice. How come it's not that way with bills on Capitol Hill and shit like this, where this MSCI has already, said, okay, well, you guys can stay in, and now they're changing the rules again. Because the finance company, MSCI, has opened a new consultation this month proposing to identify and exclude non-operating companies from its global investable market indices. The proposed classification would be based on 5 financial ratios rather than a threshold for cryptocurrency holdings. The proposed screen, if applied to the MSCI ACWI IMI index, based on the company's crypto holdings as of May 2026, would have resulted in the deletion of 3 companies: Strategy, Metaplanet, and Yellowcake. NASDAQ-listed Strategy has steadily accumulated a total of over 840,000 Bitcoin since 2020, becoming the largest publicly listed Bitcoin holding firms. And then Tokyo-listed Metaplanet has snapped up 43,000 Bitcoin. That's worth over $2 billion right there. And then there's Yellowcake. It's a listed holder too, but it holds uranium, not Bitcoin. The process starts with a core screen which checks if a company's operating assets account for more than half of its total assets. If it does, no further scrutiny is conducted. If it fails that, it moves to an exclusion screen that uses 5 ratios: operating asset intensity, expense intensity, cash flow, fair value intensity, and capital dependence to make the final call. A company becomes ineligible for index inclusion if it fails 4 out of the 5 test ratios. MSCI's description of the so-called non-operating companies not fit for index inclusion reads like a checklist of Bitcoin treasury firms without actually naming any of them. Companies that create value by accumulating and holding non-operating assets generate little cash from actual operations and depend on outside capital rather than their own business to grow, MSCI explained. Companies not currently in the index face the stricter thresholds based on their latest single filing. An earlier consultation, opened in October 2025, targeted digital asset treasury firms, specifically those holding 50% or more of assets in Bitcoin or other cryptocurrencies. That proposal named 39 companies, triggering crypto market volatility and industry backlash. The proposal was ultimately deferred. MSCI has invited feedback from market participants through September the 30th, and the results will be announced roughly 2 weeks later, on October the 16th. It has said that any resulting changes would be folded into the November 2026 index review if the proposal is adopted at all. So we're right back to where we started from. when MSCI started sounding the horn on all this shit to begin with. Now, all this said, I kind of agree with MSCI. I don't think they should be redoing this again and again and again until they clearly get what they wanted in the first place, and that would be the exclusion of, upwards around 40 companies. But I can't really find fault in their logic structure either. The only reason I don't want it to happen right now is because I don't need any further downward pressure on Bitcoin. I'm tired of the bear market. I'm bored, and people are getting pissy, and we're making serious fucking errors here as an industry. And I'm not getting, I mean, I've gone through everything that I think is wrong for weeks now. So I don't need to rehash it, but I can't find fault with MSCI's logic. Look, if you got a company, what do you make? And how much does it cost to make? And how much do you sell it for? And is the price that you sell it for not only more than what it costs to make the thing, is it substantially more? Do you have an appreciable margin of profit on the thing that your business conducts? So this is just a classic question. This is the widget question. Do you make widgets? How much does it cost to make the widget? How much do you sell the widget for? Did you make money on the widget above and beyond what it costs to make the widget? This is just basic, Masters of Business Administration 101, dude. Ain't that freaking hard. And yet we have 40 companies that essentially have no product to offer. And they don't really have a service to offer. Strategy, I guess, still sells some form of business intelligence software that's been hooked up to AI, but they don't really ever talk about it. All that Michael Saylor ever tweets out, and Strategy themselves that I've seen, is just how they're going to sell more Strategy shares to load up their cash reserves and sometimes buy Bitcoin, or sometimes sell Bitcoin, or sometimes announce a dividend restructuring on STRC. But they don't really talk about their business intelligence product that they're selling. They're not telling their story about their product, which means that, as far as I can tell, they have no marketing for the actual product that brought Strategy to where it is today. I don't see that as an operating business either. And I've said it on several occasions, so I don't want to be a complete fucking hypocrite and say MSCI needs to go, jump themselves off a cliff. They don't, because they actually have a really good point. Do you have a company that is a public company that has stocks on or shares on stock markets and indices? Well, then what do you sell? You can't just sell financial instrumentation. As for a bank, banks are allowed to do shit like that. But even banks have freaking customers. They have deposits. They have checking accounts. They get, some of them get overdraft fees. Some of them make loans. They actually have fucking products to sell or services that you can use. As far as I'm concerned, I don't know what a Metaplanet, I think, actually has some kind of, medical device that it was born under. I can't really remember that. There's at least one company that is a Bitcoin treasury company that actually has good medical products that people like doctors and hospitals actually buy. So I can't find a fault in MSCI's situation. What I do find fault with is they deferred this entire mess a long time ago, and now we're back here. Make a decision. I agree with your logic, but you cannot defer this any further. You're going to have to make a call so that we know where we all stand. I'm not happy about the thought of Strategy, losing its listing on MSCI, because it'll cause the price of Bitcoin to fall. And like I said, I'm tired of the bear market. We're all exhausted. We've all seen a lot of shit this time around. It's been a pretty eventful bear market, and not in a good way. You got cold card going on. You got the extended bear market, a bear market going on. You got wars going on. You got inflation happening. People are, whether they're in Bitcoin or not, even the people outside of Bitcoin, they're not happy either. Have you been to a fucking grocery store lately? Look at the faces of the people walking around. Look at the way they walk. Look at the way they interact with each other. And look at the way they interact with people that you think that they may not know. Like, a checkout person or somebody who's helping them in the store, or just, two people that are engaged in some kind of discussion. And then ask yourself the following question. Does this look different than the way I remember this kind of thing looking 10 years ago? I find myself answering that question. Yeah. I mean, I was in a freaking parking lot in Durango, Colorado, kind of hanging out by my sister's car while I was waiting for her to do something inside the store. And I was just outside. It was a beautiful day. Next thing I know, I hear two women screaming at each other in the very same parking lot, and not too terribly far away, but they were like, I don't know, about 100, maybe 50 yards away or something like that. And I mean, I thought they were going to start throwing down physically. I mean, the way they were yelling at each other, and I don't think they were friends, because I think somebody cut somebody off in traffic and followed them into the parking lot and whatever. But I'm seeing instances like this where people are just losing their shit left and right. I'm surprised that I'm not hearing a lot more about road rage right now. People are on edge, man. It ain't just here in the United States. I think this is all over the world. There's probably not a lot of people in, I don't know, Costa Rica who are this pissed off. Maybe there are. I don't know. I don't hang out in Latin America. But as far as the news stuff from the West, news reports that I'm seeing, I'm just seeing a lot of anger, a lot of frustration, a lot of sadness, a lot of depression. And it just doesn't look like it's getting any better. And I blame us for our apathy in letting the people that are running the world the way they're running it into power. They shouldn't be there. They should all be gone. And credible, mentally stable people should be in. And for those, he's talking about Trump. I'm talking about all of them. No matter what color they purport to be, red, blue, purple, green, pink, orange, I don't give a shit. All I see is a bunch of people that have absolutely not one care in the world about the citizenry in which they said they represent. Because if they did, the world would look very, very, very different. But nobody wants to put up with this shit, which is why I kind of think government as a structure shouldn't be, no government should be this big. There should not be a federal government of the United States of this size. I think most of that shit should land in the states. That way, Wisconsin can worry about Wisconsin and not worry about Texas. Texas can worry about Texas and not Oklahoma. Oklahoma should not have to give a shit what Washington State or Idaho does. The only outreach that they need to have is trade agreements across their borders. Interstate trade. That's about it. Maybe like their own standing militia. Shit like that. And maybe the states themselves should kind of stay out of the business of regulating every individual county in the state and leave the counties to make decisions for themselves, which would affect the cities that are in those counties. But still, we got to decentralize a lot of this stuff, and I just don't see it as happening. It's only grown. The centralization has only gotten bigger and badder and uglier and has more far-reaching consequences. It is what it is. But that's all the news that I have for you today. If you enjoyed the show, please consider donating to the show at bitcoinandshow.com. That's bitcoinandshow.com. You can throw me fiat currency over there. If you want to do it in Bitcoin, just use any Podcasting 2.0 app and you can give me boosts with big fat sacks of sats or stream me Satoshis, and I'll see you on the other side.
This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.